Welcome. Today we're talking with Wayne Miller, Senior Vice President, Innovation Programs at the Independent Community Bankers of America. Wayne, welcome, and thank you for joining us at today's Banker Digest.
Larry, thanks. What a great opportunity it is to have a chance to chat with you today. I look forward to our conversation.
Good, so do I. So Wayne, let's get started. Let's begin with, what is the Independent Community Bankers of America?
Great question. So we're a 90-plus-year-old organization dedicated to the advocacy of community banking and really speaking to the concerns that lie on Main Street today as you look at community banking. Founded really on three important pillars, which of course are advocacy, where we represent the 5,000 community banks from coast to coast in this nation on Capitol Hill to ensure that the topics, the concerns, the regulatory, et cetera, and policy are addressed effectively, which is really how the organization was founded. In addition to that, our second pillar is focused on education. What we refer to as CBU, or Community Bank University, provides literally hundreds of solutions for both from a credit perspective as well as a non-credit perspective to ensure that our community banks have the wisdom, the knowledge that they can share internally and beyond with their teams to be on the cutting edge of so many things, and everything from Bankers 101 to how to resolve issues as it relates to innovation, like demystifying digital transformation, for example, right? And then lastly, the third pillar, which I'm actively involved with, is that of innovation. And how are we working together to address the needs of these 5,000 community bankers as it relates to this ever-changing world of digital transformation?
Great. Thank you, Wayne. So how does the ICBA help community banks address some of today's challenges? You kind of talked about this a little bit in your three pillars, but if you could embellish upon that.
Yeah, I think, as community banks are, when you look at the average size, kind of sub 1 billion for the most part. When we look specifically at innovation as, kind of where my wheelhouse is, it's very difficult for them to know where to turn today to be able to provide solutions to the relevant concerns that they have, both from a competitive perspective, certainly as it relates to being profitable, and also that of efficiency. And that's the thing that we really care about, Larry, is can we help these banks be more profitable, more competitive, and more efficient? And, as you look at the world, specifically as it relates to innovation in fintech, at any given day, there's about 25,000 fintechs that exist today on the globe, many of those just in the United States. So if you think about being a community banker, where do you begin to source those solutions? So what we have done now in the fifth year, we just completed our fifth program, actually now in the fifth year of our accelerator program in innovation programming. What we want to do is begin with having what I like to suggest are big ears, right? God gave us 2 ears and 1 mouth for a reason. I could probably focus more on listening and less talking, but regardless, the issue here is are we listening to our bankers, and are we trying to do our best to understand the concerns they have to identify those problems? Once we've been able to do that, and I work with a group of, I work with all the bankers as far as that's concerned, but we have a select group, which we refer to as our selection committee and advisory committee. And they help me and my team identify what is sort of keeping community banking up at night. We see things today like artificial intelligence. Fraud is a big topic. Instant payments, real-time payments, as we see the advent of FedNow and so forth. So we work with them to select those most relevant topics. And that gives us sort of our shopping list by which we go to the world of fintechs and pull upon our networks to try to find relevant solutions that address those concerns. And that I can get into that in greater detail, but that's very much the way we go about this. And then together we work to select the companies that we want to work with, and we categorize them sort of in 3 different ways. One is, should they be a part of our fintech programming? 2, should they become a corporate member? Do they provide certain value to the ICBA? And then ultimately, do we want to see them as what we call a PSP, or a preferred service provider? I think the important message here is, one, again, big ears and listening gets us to the right places quickly so it's relevant, and then we can do the due diligence. The other thing, too, is if you're an organization that wants to serve community banks, that doorway for you is through the ICBA. No one advocates, educates, or innovates as effectively as we do when it comes to that. So I don't care whether you're a mature company that's doing $50 billion worth of business, or you're a fintech that's just starting doing $50,000 worth of business. We'd love to see you put your hand up and come to us as a place to start.
Great, great. Thank you. So Wayne, what are some examples of these ICBA initiatives that you were discussing?
I think there's a number that I can share with you, Larry, but let's reflect back on our last accelerator program. Through the process that we just discussed, what we determined was the two most critical areas, or acute areas, if you were, for banking right now, was around the instant payments, real-time payment situation, particularly as FedNow's now running and operating. And then secondly, the issue of deposits. Somewhat cyclic in the business of banking. If we go back 12 months ago, we weren't really too focused on deposits, but that shifted quickly, right? So we set out on those two particular concerns. And what we went to do is we go through an application process. We work with the selection committee, and we identified 3 companies that serve the instant payment, real-time payments situation directly, as well as that of deposit gathering and also deposit retention. Collecting deposits today is one task, but being able to make sure that you retain those, keep the balance sheet fat, so we have the opportunity to lend effectively, was our other challenge. So we again identified 3 companies from that as well. During the course of the accelerator program specifically, these banks, which exceeded about 80 in terms of the one-on-one conversations that we have, and those are 30-minute sessions that the banks sign up to participate in. They'll sit with that particular fintech, and they will go through a problem solution demonstration of the product, and then a conversation or feedback around that. And these companies too, just to level set a little bit here, these companies are in market and doing business with community banks today. So while they may be what we would call growth stage or early stage, they're not necessarily startups. One of the companies, for example, Micronotes, already engaged with over 150 community banks working on a day-to-day basis. So the banks get a chance to see these solutions, and then of course that drives us towards adoption.
Great. Thank you. So, Wayne, as banks, get involved and start using the initiatives that the ICBA has helped incubate here, how does the organization help those banks to adopt and implement the initiatives in their own bank?
Great question. One of our measures, of course, of our success is that are the banks adopting these solutions, right? So a couple responses to that. First of all, you have to have a realistic expectation based on the ability for any bank today to adopt a solution. That can sometimes happen very quickly, or that could take a couple of years, depending on their own roadmap, where they are in terms of the adoption of technology. To expect a community bank today to adopt, our expectation is they'll adopt 1 to 3 new types of technology in any given year. Again, that's budgetary, Larry, that's priority, all the things that go along with that. During PPP, we saw a very rapid adoption, right? Because of the demand, for example, of some of the companies that we put forth through what we refer to as a solutions form, right? So we work very closely with them to try to ensure, again, that what they see is relevant, but more importantly, ensure that the fintechs and the PSPs and the corporate members that we're working with understand how to effectively communicate and really kind of speak community bank. And I think that's very much a part of this. Our environment that we create, for example, during the accelerator is not really a sales environment. It's really, we try to create a highly collaborative environment that's very safe for the fintechs and very safe for the bankers to have an effective collaboration. Community bankers will tell you that being sold is not something that they that's at a premium. They can stay at their desk and get plenty of phone calls from plenty of fintechs on a day-to-day basis, but the right ones are what matter. And I think those are some of the ways, or certainly a way in which we try to create that exchange, that connection, and that opportunity for them to work together to adopt. The other point that I'll make there too is, as we go through our vetting process, two things that bankers care about very sincerely is what is the cost to do business with these fintechs, and what is the implementation lift, right? Do they need to connect to the core? Is this something they can do through an API or some sort of a middleware connection? What's the lift? And so being able to help identify that helps the bank, again, to look at a relevant solution that hopefully they can adopt quickly.
Great, great. All good points. Thank you. So Wayne, thank you for spending time with today's Banker Digest and discussing the important work of the Independent Community Bankers of America, as well as the initiatives that support its member banks. Again, thank you, Wayne.
Larry, thank you. And listen, let me make a point here. While we have 2,700 members at the ICBA, we support all 5,000 community banks in this country. So our programming is very seldom exclusively for our membership. Our accelerator program is open to everyone in community banking, as well as those outside of community banking as well. And same things with some of our other programming. So pay attention to the ICBA website. Please, I think you're going to share my email. If I can be helpful in connecting folks to our resources, please put your hand up. We'd love to help. And again, thanks for letting me share what we're doing with you today.
Great. Thank you, Wayne. So in closing, thank you for joining today's Banker Digest. And as Wayne said, if you have additional questions, please see the link in his bio.